Assalamu alaikum rahmatullahi wa barakatuhu. Zakla for everyone joining. I would like to welcome everyone as well to this month's talk hosted by the Ahmadiyya Muslim Research Association on the topic of Islamic finance versus modern economy. I'm delighted to have Dr. Farooq Mahmood Sahib with me, who is a senior lecturer at LSE as well as Kingston University, and of course serves within the Jamaat at various roles as well. For those of you who have joined us for the first time, although these are monthly organized, the format is very simple. We're going to start off with Tilawat, and then I'll hand it over to our guest speaker to take us through their presentation on the topic. And that's the first part. And then after that, inshallah, if we have enough time, we will then open it up to a question and answer session to the audience as well, inshallah. So without any further ado, let's make a start. Can I request Talha Ahmed Sahib for Tilawat?
السلام عليكم ورحمة الله. أعوذ بالله من الشيطان الرجيم. بسم الله الرحمن الرحيم. الذين يأكلون الربا لا يقومون إلا كما يقوم الذي يتخبطه الشيطان من المس. ذلك بأنهم قالوا إنما البيع مثل الربا وأحل الله البيع وحرم الربا فمن جاءه موعظة من ربه فانتهى فله ما سلف وأمره إلى الله ومن عاد فأولئك أصحاب النار هم فيها خالدون. يمحق الله الربا ويربي الصدقات والله لا يحب كل كفار أثيم. The English translation of the verses recited before you is as follows. Those who devour interest do not rise except as rises one whom Satan has smitten with insanity. That is because they say, trade also is like interest, whereas Allah has made trade lawful and made interest unlawful. So he to whom an admonition comes from his Lord and he desists, then will that which he received in the past be his, and his affair rests with Allah. And those who revert to it, they are the inmates of the fire, therein shall they abide. Allah will blot out interest and will cause charity to increase, and Allah loves not anyone who is a confirmed disbeliever and an arch sinner. Jazakumullah.
Zakla. I would now like to hand it over to Dr. Farooq Mahmood Sahib to take us through his talk. Farooq Sahib, if you're ready, then we're good to go.
Assalamu alaikum warahmatullah. Thank you very much for inviting me over. This is very, it's an honor for me and a privilege to be here as part of the whole conversation. Firstly, I don't see myself to be at all worthy of doing the work that I've been asked to do. So it's just a part of the service that I'm rendering in terms of presenting what I could present in my own humble way. Okay, firstly, I'm challenged by a couple of things. Let me first share my screen. It would be easy for me to sort of then start talking. Wait 1 second. Okay. Slideshow. Right. Can you see my slide? The first slide?
Yeah, we're on the first slide.
Okay, Jazakallah. Okay, first of all, let me just start with a very simple background to all this. I do feel it's a very difficult topic to sort of cover within a session like this, especially when the audience is very varied from all sorts of backgrounds. And I got to know this only until recently, that the audience is going to be a mixed bag of individuals from all sorts of backgrounds. When I was asked by the chairman of your association, AMRA, he very kindly asked me to speak on this topic, and I had very sort of mixed kind of reaction to it in my head, because I thought, firstly, it's a very loaded topic. A lot is happening in there, and does not mean it was an excellent topic, but to cover within a session, it has a lot of dimensions to it. It talks about the current day problems as well inherently in this conversation, and then also whether Islam and Islamic finance, as the term used there, does solve the problem. So it does come with some inherent assumptions to start with this statement. So that was one challenge I was faced with, as to how to go about this and how to streamline this conversation. The second part, which hit home this point even more seriously, was this: that when I was met with one of the very senior members at the Mubarak Mosque a couple of days ago, and this gentleman is an elderly, very senior person. He said to me, "I'm looking forward to the talk." I said, "Okay." And I was a bit surprised. Why would you be interested? And he said, I have read a lot about different topics in my life, and I know him. He's mashallah a very senior gentleman, has served in various capacities. And I said to him, and he said, "But finance is one area which I don't understand anything of. So I'd like to hear this." And then I was again under pressure. Look, that means I'm going to start from sort of level where everybody is on board. Okay, so so this is why. So when I started to prepare that in my head first as to how I'll go about this, I decided to start off with some academic work, which is normally what people tend to do. And then I refined my thought process. Thought maybe academic work in a short period becomes a bit heavy, and keep it more like a fluid conversation, which is at practical level for everyone to follow. And more academic works, there could be plenty out there, very easy. Go to Google Scholar and search it up. There's a lot of information available there. Okay, so without further ado, so based on all this, what we're covering today is a brief history of the global financial systems. The word finance is not the word economics. Let's be very clear on that one. And that's where they're used interchangeably. So let's be very clear that we are discussing here global financial systems and not the economic systems. I mean, a part of me would always be inclined to start the talk with socialism stroke communism versus capitalism, which I will not do now, only because we're discussing financial systems. The economic systems aren't here for comparison. Conversation might bring about things, but again, because socialism is almost irrelevant in the world now, therefore that conversation becomes slightly old and a bit stale to have any chat about. I think maybe talk certainly should be surrounded by capitalism, good, bad, its ills, and especially in the financial context of capitalism. And what are the issues with financial systems? Of course, the assumption in the title that was given, assumption is really that certain ills, problems with the financial system, and we will find out what the problems are. In that, I've brought in some of the theories, hypotheses, lenses, paradigms, which do touch upon the problems with the financial system. And I think everybody who knows a bit about finance would know that we have problems, right? So therefore, to state the obvious is not the point here. It's basically to almost look at that from more a bit of what academics have said very briefly, and then we look at what Islamic economic system says. And I am a great fan of economic system, not a financial system, because financial system should be a subservient of the economic system, not vice versa. All right. And the world we're living in now is, in fact, where financial systems lead economics, which is such a sad thing to see, because economic policy, economic morality, economic rationale should guide rather than financial systems where there's only some who gain out of it and the rest suffer. That is not how it should be. Therefore, I would like to use the word economic system there, where I believe financial system is only a subset of the economic system. All right. Okay. And then the question is whether Islamic finance is the solution, because that's the question I've been asked, and and then I have to sort of discuss why I believe in the answer that I will give you, and then what is the way forward. Okay, so that's the plan today. So inshallah, we'll be able to cover all that in the given time we have. So I'll keep my clock next to me to make sure we are good with time. Okay, I've got a couple of slides to start with. I mean, all these references I can provide to you later on, but I mean, there's no time to waste on that kind of stuff. So firstly, this is a picture of the central government's debts, the sovereign debt the governments have been indebted with, the amounts in the world. The grey areas is where there's no data available. So therefore, some data is available to us. There's the US, US there, South America. Then we've got some Asian part of the world, Indian subcontinent, and Australia. The green and the blue seems a very low amount of debt, less than 25% of the GDP. GDP is the gross domestic product of a country, which is made up of things like consumption by the people in the country. It's about the government spending in the country. It's about the exports, imports. It's and government spending, consumer spending. That's all of them together in an economy is known as GDP. It's more like it's just a measure of how much we made in the year collectively as a nation. So that means all of that, none of them was basically going beyond 100%. So all of the countries were below, well under, basically. America in particular was under 25%. Quite surprising. Okay. No, sorry, my apologies. There was 75%. I can't even read because I properly have my eyesight. Okay. Then moving on to the next slide, which is the current one. Only a couple of years ago, GDP as a percentage of the debt as a percentage of GDP of this country. Look at a lot of oranges there, and all these oranges mean more than 100%, and they're well over 100%. Okay. The UK, the US, and the likes, and also others aren't far behind either. So none of them are in a small territory. They all are big. You might ask the question why in the previous one Australia seems to be the highest indebted country. Again, there's no time for these conversations, but I mean historically, Australia didn't have much GDP happening for that country. Therefore, GDP was small in comparison. Your debt would have looked bigger anyway. And then again, you would ask the question why small countries haven't got more than 100% debt, right? These are somewhat counterintuitive kind of conversations to be had, but the reason is because the GDPs are so small that the debt is also small in income. It's not as huge as they would like to have in many cases. But still, there's a lot of increase over the years. This little chart shows us the comparison between what the financial markets do, those long-term interest rates, versus the price to earning ratios. I mean, I'm looking entirely in the commercial sector organizations now. You've noticed that the graph is quite a long one since 1880s by Robert Shiller, one of the Nobel laureates. I think he's still in Yale University in America. And he does a lot of behavioral finance, economics, and his work is very well reputed. So this graph is basically showing us that the comparison of various companies, what that is like in comparison to the interest rates. So long-term interest rates are these, the red line there, which normally, if you see roughly, goes in the opposite direction to what the company's doing. And what it means is that the times when the interest rates are low, the company's valuation goes up, the stock price goes up in comparison to the company's earnings. That's known as price to earning ratio. And that comparison being bigger and bigger in the times of low interest rates means that they are gaining a lot more when the interest rates are low. And that makes sense. And that's why we also have seen the asset bubble happens when the interest rates are low in an economy, or the economies of the world, which happened not very long ago when the global pandemic sort of caused us the mayhem in the world, and same thing happened. Okay. But there's a worry that this bubble keeps going up and up, and people keep making money through interest. Now interest rates will again come down at some point. But I mean, I would try to explain why interest rates being low or high, either way, it's bad. I mean, one of the questions we might ask, okay, so what's wrong with it then? Interest rates are low, that's a good thing, but still it's interest. I mean, the Holy Quran, which I would always fall back on with this one, is not saying high interest or low interest. It simply plainly says interest riba is wrong. It has to be abolished. And therefore, either high or low, either way, rich become richer and the poor become poorer. Okay, so it doesn't help the poor anyway. Okay, I just mentioned the Holy Quran, therefore I thought it'd be opportune time to discuss also briefly about the history of other religions as well, interest in other scriptures. To start with, so the Abrahamic religion, starting with Judaism, the Old Testament, it says, if you lend money to one of my people among you who's needy, do not treat it like a business deal. Charge no interest. Okay. And then again, another one, this is from Exodus, and then Deuteronomy also has something similar. You shall not charge interest to your brother. Interest on money or food or anything that is lent out of interest. Okay. Now, the understanding is that the focus was for the Israelites, that you cannot charge them interest, your brother, at that time, which makes sense because they were very, very suppressed at that time. And again, I mean, scriptures are, whatever, however way we've got them on this end, because over centuries, over millennia, there was also danger of corruption, and it has happened in divine text. But as bare minimum, what we see here is that do not charge interest to your brother when it comes to the Old Testament. So again, it says to a fellow Israelite, don't charge interest, and charge to a foreigner. And foreigner means who is not an Israelite. That was permitted as per this verse that we received in this age. The New Testament says, but love ye your enemies and do good and lend hoping for nothing again. So again, this is where there's a plain order, instruction to not lend for the greed of interest on top of that. So what this proves is that as bare minimum, interest isn't allowed as we see it now. And as at highest level, interest is not allowed at all in whatever form. So either your own people or others don't charge interest. But more so, it has very clearly mentioned that do not charge it to the people who are needy. And needy is a big word again there, because poverty is also linked with interest as well. And the two verses you have already heard, our brother has recited, are very clear that Satan has made them insane, that they're going for riba, for interest, whereas God will convert that system into a system of charity. So there are two extremes there. And Islam now, the third of the Abrahamic religions, is now giving it a very clear instruction, not just about not charging interest, but also changing it for moral acts of helping the needy, helping the society in general. So then, if that's the case, if that's what the Holy Scriptures have instructed, then why are we here where we are? What's happening? Well, the Christian stance on usury, which is interest, has had a dramatic evolution over 2 millennia, ever since Christianity started. There was strict prohibition at that time, as I said earlier. In early Christianity, there's no way you could take interest. The medieval church, and in the times of the Dark Ages in Europe, that is, where there's not much development happening in this part of the world, at the same time Islam was progressing. That was the golden age of Islam. At the same time, this part of the world was having dark ages, the Dark Age. At that time, Jews were then legally allowed to do money lending, because their part, the religion of the Old Testament, allowed them to do that. And that really, in the end, historically, then led to some anti-Semitic strains in this part of the world, some tensions that came about. That's part of the history. For all the wrong reasons. I mean, hate for any religion or any people is against Islam anyway, or against any religion of the world. So, but anyhow, that's where the roots were, because they were allowed based on their teachings, whereas the Christians could not. So Christians allowed them to then charge interest, and that's where the into financial industry, there was a lot of work happening from Jews. And then Renaissance and Reformation period came along, which is the time when things started to change for this part of the world, 15th century onwards. So 5th to 15th century was the medieval time. The church had very clear instructions about not to do usury, whereas only the other brothers from other Abrahamic religion were allowed to do it. Renaissance and Reformation period. Renaissance, as we know, I mean, starts from Italy, where Florence, and we know Leonardo da Vinci, we know about Michelangelo and those people. That's the part of Renaissance that we are aware of, that a lot happened for art and culture, that kind of stuff. That also has roots within banking as well, as commissioned by the banking. And for the first time then, so slowly secularism came along. This medieval church was, the force of the church was becoming weaker, and even the popes were being created or made from the banking side of things, which I'll explain in a couple of moments anyway. So in other words, in plain English, the church teachings got corrupted and secular laws came in. Calvin was the first person seen to be, was said, who's allowed interest and said it was fair and does not exploit people. So Medici Bank is, will this guy Giovanni Medici in Florence has said, I mean, he was a very big political force, power through generations. They were able to have popes from their own family as well, and they spent a lot of money on Renaissance art and architecture. Which when you go to Rome, Florence in particular, you will see the architecture, which really is from that time. And then fast forward to towards the end of the 17th century, when the Bank of England was the first organized bank of the sort, a central bank, which was to finance the government for the war. It's the so-called 9 Years' War against France. And that's when the fractional reserve system came along. That's where the foundations were laid, where, as we have heard this phrase a lot, creating money from thin air. That sort of, there was the official moment in the modern world where people could do that, and all this has been happening for a long time, even before that. And there was a time when 1.2 million pounds were lent to the government at 8% interest, and therefore from that point onwards there were certain privileges that central bank had. So what central bank really was this, it just was basically the middleman between very rich investors and the government. And the government will, historically, governments would either raise finance through taxes or even take loans from outside the country. Now, for the first time, it's happening. They got successfully, within a few days, they got their money raised, 1.2 million pounds in that time, which is a lot of money. And going forward now, so commercial banks developed, JP Morgan came along, the finance, railroads, steel. So it was part of the industrialization, the industrial revolution they've had a huge part in that, because again, finance was needed, money was needed. But I mean, I want to go back for a second there. You notice that the history of Bank of England is with war. And it's very interesting that the start of the first central bank also becomes based on war. So there is definitely a link between wars and banking. And that's the Holy Quran says, Riba, get ready for a war against Almighty and his prophet. So this is what we have to look at. I mean, things are so clear and so vivid when we look at them from the point of view of how the Quran has already taught us how things will turn out. Then the Great Depression, we all know in history, Glass-Steagall Act came along in 1930s, which was to separate the casino banking, the investment banking, from the commercial banking units, just to make them less risky, if you like. Bretton Woods is a big event post Second World War, when the governments got together and it was decided that UK dollar will become the reserve currency. Reserve currency means where the choice of the reserves, that countries keep reserves in that currency the most. That's not the only currency, of course. People can keep reserves in euros and pounds and others, but dollar is, of course, the most popular one, because US is and was always seen as the most reliable government not to go into liquidation or bankruptcy. So in the past used to be gold was the reason. for gold was the basis, or silver, or different kinds of commodities, and based on them, you could issue a currency. But in this case, they said now other governments haven't got enough gold. US has got gold, so let's use US currency, dollar, that's linked with, pegged to the gold, and then US other currencies will then be accepting that US as the point of reference. So this is the time when still gold was a standard. But fast forward 1971, there was the end of gold standard, when the banks were freed to create credit exponentially. That's when the American dollar was also unpegged or removed from the link they had with gold. So ever since then, what we know now, the fractional reserve banking really has taken another sort of exponential growth, which is beyond control now. And slowly things change, and even Glass-Steagall Act is also repealed as well. And then we see what happens ever since then. 2008 global crisis happens, and Lehman Brothers collapse through shadow banking, money market investments, that kind of stuff, with trillions of dollars risked. Okay. So banking didn't just fund the Renaissance, it wrote the playbook for modern cultural patronage, from Medici's to the Goldman Sachs and JP Morgans of today. So still you notice that the investment banks are investing money in art and culture, still trying to be legitimate in the eyes of the beholder. So I've just now put in some academic theories briefly that all lead to the same overall conclusion. First hypothesis, so the different lenses we're looking at things through, is a financial instability hypothesis, which is the paradox of stability. Very interesting paradox, that stability breeds instability. That's by Minsky in the 1970s. I think it was 1970, right? And that breeds. So what happens when we are very stable? We become so complacent that prolonged stability leads to risky behavior. And Minsky identified that a progression in financial practices during economic expansion is a reason why we suffer. So he used the word financial practices, and this is because of financial instability that we see in the world. And the different levels, hedge, speculative, and Ponzi, where people then first are able to pay the full debt through the cash flow, then things become different. They just only pay interest, keep paying interest, and refinance the principal part. And then Ponzi is where they refinance everything. So you keep deferring debt backwards, pushing it back. The other hypothesis about the too big to fail concept, where there's a number of academics, and especially Ron Feldman was also part of Fed Reserve, an American central bank, if you like. He said the bailouts encourage moral hazard. If I could sort of sit back and very quickly discuss about moral hazard. In economic and finance, a lot of works have been done using this particular lens, which is known as the agency theory. And the agency theory has two parts to it: adverse selection and moral hazard. The adverse selection part is where you select the wrong organizations or people or entities for a particular operation. For example, if you're lending money, for example, you select the wrong people to lend to. That's known as the adverse selection. Then there's moral hazard. Moral hazard comes about when you are in the process. You've already been lent the money, and how you deal with that, how you go about things, and don't treat things with fairness and honesty, then there's a moral hazard. And that moral hazard is based on the principal agent problem. I don't want to. Sorry, I hope I won't make it overly complex for this short session. That there is a group of principals and group of agents. Principals give agents their trust that they will be acting on their behalf. So we see a lot of different scenarios in the world where principals have put trust in the agents and agents misbehave with their own perverse behavior. That's called agency theory. And that's where the agency problems come in, because of the sometimes black box. You can't see, things aren't very transparent. So bailouts lead to moral hazard, because Who is the principals? We are the principals as taxpayers. And who are the agents? Let's, in this case, the government, for example. Or in the case of banks, is also the banking managers become the directors and the board. They become the agents. Bailouts encourage moral hazard, which means when we know bailouts will happen, we become excessively risky because we know we'll be bailed out anyway. So that's a moral hazard problem that has caused the too big to fail problem, where banks think they're too big to fail, and therefore they carry on doing things the way they're doing it. And that's what they are suggesting. The large institutions take excessive risk more because that's where they think they will be bailed out anyway. Another perspective is the financialization theory part, which says that finance would now, if you again, everything's been financialized, which means now we're financing everything: housing, healthcare. People now buying everything on finance. We I think even the ones who are joining this conversation also should be aware, and we all aware, that many of us, even us, would sometimes be happy to go and take loan for little things we need, not need, just want them. And that really is financialization. But that becomes even more problematic when it makes people struggle in the most important needs, which are housing and healthcare. And therefore, financial institutions shape policies to maintain dominance. And that's for their own short-term gains at the expense of long-term growth. And as a result, that creates the gap wider and wider, because people who are benefiting from the financialization are gaining all the money from those people who are suffering through that process. And the debt deflation theory is debts lead to deflation. Deflation is when prices become very low and people lose their jobs, and as a result, they start selling their assets to repay their debt. And that's what happens to normally the poor people who haven't got enough resources elsewhere. And that will depress the asset value and cause business failures. People will be laid off from work, and pessimism grows, and people start hoarding and reduce spending, investment. That becomes a vicious cycle, and leading to depression, which is the study based on the 1928 depression. And lastly is about the behavioral economics or behavioral finance side, where people become irrational. Rather than being rational, the behavior is irrational. Even sometimes is a book called even Irrational Exuberance by the same gentleman, which I mentioned earlier, Professor Robert Schiller, Irrational Exuberance. So people are exuberant irrationally. Overconfidence kicks in. Or sometimes it's loss aversion. People are overly sad about the loss. I mean, sometimes they worry about sunk costs as well, the things that they can't recoup. They overly worry about the things they have already lost, and they stop investing where they should invest in the future. So mentally, people are under a lot of strain, and that leads to more harmful behaviors. On the other end, it's the harmful behaviors in terms of speculation. When let's say interest is going down, people keep buying, keep investing, not knowing whether they'll be able to pay when things become more difficult, and that causes long-term problems. Okay. Now take a couple of moments of break, unless you've got any questions that have come through. I don't mind answering questions as I go along. I don't mind anyway if there are any questions, to give you some break as well from the constant talk from my side. Is my audio okay? Is everything fine so far? Is it becoming overly boring, this conversation? Please let me know. I can change tone or tack if things are not making sense or being overly heavy or anything. Please give me feedback if you have any.
I think so far, Dr. Saab, all good. We can hear you perfectly fine as well. But yeah, as Dr. Saab has mentioned, if there are any questions, please utilize the chat function, or if you would like to come off mute, you can raise your hand and we can unmute you as well. Perhaps if you allow me, Dr. Saab, I'll also take this opportunity to remind our audience that we have on the 23rd of August, we've got our AMRA conference coming up, and we are accepting abstracts, but the deadline for that is only a week away. So if anyone would like to submit an abstract for the conference, please feel free to get in touch with us as soon as possible so that we can process that.
Okay, now it's back to the point on rates rise, rates fall, the poor pay for it all. All the time, it's the poor who are suffering. So the rich own the assets, and they basically can wait for cycles. So they know when the things become cheaper, they'll start buying them. When they become more expensive, they'll start selling them. They've got enough capital to invest. The most important word is invest. Poor people tend to think maybe, perhaps, we also have to take a loan and loan on those things, which are not investments, but basically are costs. Unfortunately, some of the things they can't help because they're living paycheck to paycheck. They're indebted. They carry debt, not investments. That is what the problem is. So we should all also learn the lesson that investments are important, not taking loan unnecessarily. People get themselves indebted with having insecure future vis-a-vis jobs, housing, health, and education. When it's high interest, the poor people find credit to be more expensive. Credit cards, because they typically will be suffering with credit cards, for example. They'll be they've got variable rate mortgages, for example, and that's the only thing they have, the house, with a huge amount of spending going to the mortgage. That becomes more expensive. That leads to a recession if there's high interest rates. And then low income people lose their jobs more, and therefore poor people cannot take advantage. Also, that's another problem. They can't take advantage of the high interest as they've got no money they've saved up. They don't get anything back from it. And when interest are low, asset prices inflate, low wage earners' wages don't go up as much, they rather stagnate, and cost of living rises for them. So people with low savings still lose value as well because things are more expensive for them. So either way, the system of interest is causing problem for the poor and making the rich richer. So in a nutshell now at the end, that capitalism has a lot of problems in its current state. And I will not look at those in detail now. I think we can sort of carry on going with all of this, but there's two G's I always say: growth and greed. They're two big things, two G's that cause the problem. The greed for growth that we have in this system that we have currently is causing problems. Success is measured to the word growth, and the word growth is seen as totally intangible monetary growth. That is the dilemma of the current day and age, that we think growth is nothing but money, wealth, physical things, assets, and that to satiate that hunger, that thirst for more and more, is creating people immoral as a result. So now moving on to, I think it's probably good timing, moving on to the Islamic economic system then. It is just the tip of the economic, so Islamic finance is only the tip of the iceberg of Islam, really. It's just only a small minor thing, which of course is very topical because people like to hear the word finance there. But it's a very simple thing still. There's nothing rocket science about it. Islam's beauty is it's very simple for all. And the whole problem is the information asymmetries in the world right now. Some people have a lot of information and they want to keep holding that information to themselves. And some people feel as if the information is so difficult to get, they don't even try. And that asymmetry causes that gap to be not just financially, but also knowledge-wise, the gap is becoming bigger and bigger. And Islam even brings the two closer as well to make sure everybody also has equal right to learning as well. So in finance, Islam is also very simple, not like the financial systems that we have now that people find them so confusing and so complicated. I have got some wisdom, received some wisdom in this very brief couple of slides from Hazrat Mirza Bashiruddin Mahmud Ahmad, who was the second successor Promised Messiah. In 1945, he gave a lecture in Lahore, and there was a gathering of academics and scholars. In a nutshell, he tells my Islamic economic system to be the one which is upholding individual enterprise. So there's no compulsion. People will themselves be responsible for their own good and bad when it comes to operations of their enterprise. They make profits, they make losses. That's in their own decision making. Voluntary efforts are needed for rectifying inequalities. People should be sacrificing voluntarily. So there's one extreme is greed, the other is the desire for sacrifice. Then wealth created by God for the benefit of all. So wealth belongs to Allah. That's what the main thesis is. That nothing is, a human does not own anything, so to speak, because we all die empty-handed, and therefore should treat the wealth we have as trust that we're holding from the Almighty Allah. And if people don't do that, then there should be full force of the law to make it happen, that people do the right things to keep their wealth and their practices in check. And there should also be a balance between individual freedom, as I said earlier, in terms of their decisions in businesses, as with state intervention. But state can intervene, especially for things like where people's basic needs have to be fulfilled. Islamic economic system has basically about living simple life and do not waste. This is an important one. Wastage is a big problem that we're facing right now. I mean, how many of us, when anything breaks in our house, we go and replace it rather than having to get it fixed? Because we've got different mentality now. We're going to buy everything new. Prohibition of riba interest is very clear. And also Islam has brought to an end the institutional slavery. And it's a basis of animosity between nations as well these days, which Hazuri Ibn Aziz has mentioned a number of times. Okay. So number one, within that, monopolies are totally disallowed. Islam promotes SMEs, small and medium enterprises. So we'll discuss in a few moments how they could now be helped through Islamic financial system. And controlling price is not allowed. Antitrust laws should be in place. Nobody should be too big to fail, as I discussed earlier. Nobody should be too big as it becomes a monopoly. The Apples, the Facebook, the Teslas of the day, they are discouraged because the wealth has to be distributed. Not that people's enterprises should not be rewarded on, but still they should pay the right amount of taxes on them, and they're also fulfilling the rights of their own workforces and not influencing governments as they normally do these days. So it's just to stay within their own bounds. Islam promotes to charge on the idle wealth. The zakat as a system is about charging on the idle wealth. So Islam is encouraging the wealth has to be in circulation all the time, not creating money out of thin air, which means the fractional reserve system, where if you put £10 in the bank, the bank could basically, business to spend £10, will then issue out a loan to somebody else for £100 worth, because bank believes that you'll never do a bank run, and even if you did, they'll be bailed out by the central bank. Islam is about distribution of wealth. Again, it's about finance, really. Distributing wealth amongst the heirs. All heirs you have, legal heirs. Not that you don't like a child, you don't give them their due part. And government should provide all the basic amenities, food and shelter. Now, case for examining Islamic finance or economic system. I think I'll leave that slide for now. Okay, so what is Islamic finance in essence? The first thing is riba, is the interest, right? Because of time, I've left that slide. Okay, riba, interest has been forbidden. Allah will abolish interest and will cause charity to increase. Al-Baqarah, one of the verses that was recited earlier before the session started. So we know that interest will be taken over by charity. That means people have to become charitable. I think it's a hidden message in that. The system would be so moral that people are basically inclined spiritually to become charitable. So without a spiritual system, people won't be charitable. They'll be always self-interested. So first thing really is interest on one end, one extreme, where people are, interest leads to selfishness and charity leads to selflessness. And therefore, from one extreme to the other side, being people being there more giving and more generous. Second part of the Islamic finance system is, or financial system is, risk sharing. There should be no guarantees about what you get back. So if there's any product you see in banking, we return you that much, that product is absolutely non-Islamic, because you cannot really be guaranteed risk you're taking based on what you know about a business. But risk cannot be then overly speculative either. That's also wrong. Risk, in a sense, risk knowing the rewards at the same time, risk and rewards of ownership or something, right? And you're also knowing that if I'm doing this business might make money, might not make money, and at least some efforts are going into that. It's not totally speculative. This is not a game of chance. So first, riba. Second, risk sharing. These are the principles of Islamic finance. Number 3 is maisar, right, which is basically the game of chance, right? The luck-based acquisition of something is maisar. And then gharar, which is all transactions have to be asset-based. So, for example, if there is fish in the sea, you cannot buy or sell fish in the sea because they've not been seen, they've not been caught yet. It's all speculative. They might be dead by the time you catch them. And how many there are, how healthy they are, those questions are unknown. So because both parties, there's again the word information asymmetries, the agency theory. So Islam very well understands this theory. Well, all theories, in fact, all good theories sprout from Islamic teachings anyway. So this talks about the information asymmetry should not be there. The seller and the buyer should have that asymmetry completely removed between them. And gharar is where the asymmetry remains. And therefore, that's also not allowed. It has to be moral, as we know. Certain type of operations cannot be indulged in, alcohol, gambling, and many other ethically and socially questionable investments are also not allowed in Islam. And lastly, as I mentioned, the zakat is a way to distribute wealth. And it's not just zakat, but other means of financial sacrifice as well, as and when needed, depending on the needs of the time. Okay, now coming towards the end of my conversation, and means last two slides, but that's I think this is the crux of the whole conversation. The most common terms you'll hear, again, this list is absolutely nothing in comparison to the other products you'll see in the Islamic banking anyway. Again, those products are nothing, but I think they're based on the concepts we've learned, but also they're married with the more traditional Western type of model as well. So therefore, there are problems. I mean, if you have any questions, we can discuss about individual products as well. But I mean, for now, let's look at the ones which are the most common ones. So Mudaraba and Musharaka, I think those two, alongside Qarz Hasana, are the main ones Islamic finance really would encourage. Musharaka, I would say first, rather, is a joint venture arrangement where two people get together and they decide to start a business, and then they decide how much to share from the profit. And one of those could be a mudarib, one could be the investor. So investor could be the bank. In Musharaka, both could be. Even a bank could be one of the partners in that joint venture relationship. So bank will take some risk. We will take some risk. We'll take rewards. We'll share the rewards with it as well. So bank doesn't know how much they'll get in the end. We don't know how much we'll get in the end. There's no fixed amount there, as opposed some other murabaha type of arrangements like cost plus sale that from Islamic banks do, which is nothing but a different name given to interest. Then there's mudaraba type, which is profit sharing, where one person, let's say I am the entrepreneur, I use my skill in something if I have any, and the bank will have the money, and bank becomes the investor, and I become the mudarib. So bank puts the money in, and I put my maybe skill, my efforts into that project. And then we also decide how much to share of the profits from the two. So again, both have the skin in the game. Then Qarz Hasana, a very, very important system where it's more like a microfinance as well, or other emergency needs could be fulfilled of various people as well. That's again, very Islamic system. That's also needed alongside those business ventures plus the charitable side of things. A great combination of charity and businesses together. So Islam is all about businesses, and more the merrier. More business people out there is merrier, because the Holy Prophet has also very clearly mentioned about the more blessings to be in business. Therefore, it's very entrepreneurial. It's very enterprising, all this conversation. Don't think that Islam is discouraging. No, Islam is discouraging greed, not discouraging making money through the right means, but as long as that money also is shared for people, the brothers in society as well. Some other products you might come across are things like murabaha, which is, as I said earlier, cost plus sale. The bank would buy something, and then there's a sell, and there's a certain difference, and that markup is known beforehand. If it's known beforehand, it's just simply it's interest, right? Ijaraha, I mean, it doesn't have to be dubious; could also be done in a proper way. Ijaraha is leasing, but again, leasing if it's the right and the risk and rewards of ownership, if they remain within the owner, the bank of an asset, then it's fine. And then they could lease out to a lessor and lessee, two people. So lessee is the one who's being leased to. So we could lease an asset, but then again, it could be sharing the profits from that particular asset. If that's possible, which is very difficult in practice, then that could be fine. And then in home finance, things like diminishing musharaka, where the bank and a person could buy something together. Again, it's totally Islamic if it's done in that proper Islamic way, with no fractional reserve system, which still exists in Islamic banking anyway, in Islamic inverted commas Islamic banking. Fractional reserve system means where they could create money from thin air. Like you put in £100, they could then lend out to the people £1,000 just out of an entry in the computer, right? That's not allowed in Islam. Islam does not allow free money like that. Islam wants us to make an effort for the money. Islam is against laziness. Even that book I was mentioning earlier by Hazrat Mirza Bashiruddin Mahmud Ahmad, that book very clearly also talks about the importance of not being idle as people. Islamic system wants money to be operational and humans to be operational. Humans also need to be always doing things. So as long as diminishing musharaka is that a person and the bank would buy something together, or Islamic financial institution will buy it together, and then they will rent out the property until we buy into their share. But again, it's just everything is we share the risk and rewards of the house itself, right? It's not that when the house when we can't pay back, the bank becomes the owner of the house. It doesn't work like this, right? So bank is not operating as a separate entity. They are our partners in that relationship. But I would say Mudaraba, Musharaka, and Qard Hasana are probably the best ones that I can think of. But they need a lot from us. So now, what is the problem? So now, this is the last slide for today. Where are the problems then? I mean, I've briefly touched upon the Islamic system there. These are agency problems about information asymmetry. The question should be, why then Islamic finance not taken off? Yes, there's about $3 trillion plus of investments in Islamic finance world over. I mean, there are different places in the world. I mean, it could be Southeast Asia, Malaysia and Indonesia, for example. Countries like Pakistan, for instance, or GCC countries like Saudi Arabia, Kuwait, and the like. And even Western world, Britain has Islamic finance products. But why hasn't the world accepted that system? Is because why? And the answer is very simple. And you should ask that question, really. In my very humble opinion, the answer is, why haven't Muslims ever got together under one banner? Why they cannot even speak against the obvious cruelties in the world right now is because there are vested interests and everything. If they could not speak about the obvious things which have got no direct relationship with money as such, how could they speak up or get together for finance and economics, which really rule the show? So it's very difficult. Unfortunately, it won't happen. The countries won't get together unless there is one unifying spiritual authority in Nizam to put them under that. There's no other answer. If you're expecting any magic answers from anybody to give you, they will never give you those answers, because nothing has ever worked for them. Unfortunately, it's very, very unfortunate that Muslim countries cannot do it. So what else are they doing Islamic anyway? If Islam is a religion which brings people in with morality and with common sense, and why Muslims are lacking apparent common sense is because Muslims aren't doing what Islam asked them to do. Same is happening in Islamic finance. Okay, so why is it not happening practically? Basically, what the system needs, mutual trust from banks and individuals both. Now, if the bank in the Musharaka arrangement, the bank is a partner of an individual, for example, but the individual is doing the business. If that person is lazy himself, then bank won't see that happening. In that case, the information asymmetry goes in favor of the individuals. That becomes the other extreme then. So how do we mitigate that problem? Again, there's no easy solution. The answer is very simple again. It's an easy solution, yet not easy for the people who want to follow it in the world outside that we see. You need a spiritual system that reprimands people, the individuals, for doing immoral acts. You should have a nizam, a system that brings everyone closer. And there's a community where people are either God-fearing and they don't do wrong things. If they don't reach that level of being God-fearing, at least they reach a level of being human-fearing. What it means is that the community-fearing people, let's see, people around us are righteous people. We don't want to displease them because they will see us. How will they see us? They will see us in bad light. Either way, the outcome is good. People won't do wrong things. So perverse behavior can only be stopped by individuals if there's a system in place. A global, proper system in place where people really care about the system itself. But equally, bankers will remain bankers. Islamic bankers also, unfortunately, there are cases of being greedy. There are also Sharia fatwa shopping going on as well. I mean, compliance boards and committees they have, are they really independent because they're being paid by these banks? If they don't give them the fatwa they need to hear from them, there's always a danger. So I'm saying these are all potential perversive behaviors. I'm not saying everybody's like that, but these are perversive behaviors potentially. Again, agency problems there are. I mean, we can have this talk in a lot more detail about asymmetries, what they really mean in economics and finance. But I keep it to this conversation. So how are they independent? Because they're being paid by those institutions. But if one gives a fatwa, which is which is basically stopping from anything which is not totally Islamic, then they might lose their job or they might lose their position in the board, and they go to somebody else, right? Another problem is in the Islamic countries are, why not? I mean, there should be a model in place. Why not just in Pakistan being an Islamic country, at least, as they would claim themselves to be? Then why? Because the thing is, they've got elite class is also the ruling class. So it's in elite class's interest not to share their wealth. They will not go into Islamic system. Islamic finance will not prevail in those parts of the world. And then the fundamental problems are that banks are also competing against each other. So if people find one bank who's making it easy for them to call them all Sharia compliant products, so to speak, then people go there. Others are stopping everything, and they're not giving enough back to people. People are also greedy. The clients are also impatient. They're saying from their mouth that they want it to be Sharia compliant, but are they themselves not being greedy as the other type of banking is making people greedy? So unfortunately, greed is all around, either Muslim or non-Muslim, either in inverted commas Islamic finance or non-Islamic finance, the same thing in the end. And they still have a lot of quasi debt products like Murabaha and Ijara, which are basically other names given for a fixed markup for the bank. And also, the system is different in Malaysia, for example. They're maybe a bit liberal in some ways. And the countries have differences in the way they would look at certain products. If one country makes it difficult, that becomes less competitive, right? And therefore, they would again want to, that they are going to be things like, I would say, compliance arbitrage could be in there, or money could be made in one place because that's where they're giving you better products, which are giving better returns, the worldly returns. So I'm going to finish up with saying that it clearly means one spiritual authority, one Nizamic community to mitigate the moral hazard problem. Because moral hazard problem, adverse selection is two things: adverse selection and moral hazard. The adverse selection problem is that you will only select good people. If everybody is good, or most people are good because they're being spiritually checked all the time, they're part of a system which is spiritual, moral, and socially responsible system, then people are more likely to be the right selection, not the adverse selection. And similarly, when they get that loan, for example, not loan, could even be loan Islam, Islam, because if they get the money in whatever way, even in equity form, which is going to be the case in most cases, they will look after it. There'll be no moral hazard because they'll be looked after. The money will be looked after by the moral compass, not through the law of the land, which the law of the land is in fact protecting big corporations. If a bank, let's say, falls because of their reckless behavior, what happens? They bailed out. If a company goes into liquidation, what happens then? The company is liquidated. The director doesn't lose anything of personal property. Therefore, the system that we see in the world right now is protecting lies, is protecting fraud, is protecting cheating behavior. Whereas the system that I am humbly suggesting here talks about everything, which is quite the opposite. Thank you for listening. Any questions, by all means.